Welcome back, everyone. So my video from yesterday has aged terribly. In essence, I've been Zuckerberged and I broke one of the cardinal rules that I give on my channel for trading options, and that is don't speculate. Don't buy call contracts or put contracts right before earnings because you never know what the company is going to report. I didn't have insider information, so I definitely made a mistake. In this video, let's talk about that mistake and what happens with Facebook. Why is it so bad? Why, in one day, can one of the mega caps with a market cap close to $1 trillion have lost 25% of its value? This stock, from its 52-week high back in September at around 380, is now trading down 37%. This is incredible. So we'll go through the fundamentals real quick, we'll go through the technicals, and then I'll show you my call contracts and how much money I lost, because losing money seems to get more clicks than making money on this channel. And with Facebook, my investing thesis was, hey, Microsoft grew revenue year over year by 20%, they beat on earnings, good outlook. Apple grew revenue 11%. Year over year, they beat on earnings, looking good. Google, which is, their revenue comes from advertising, same thing as Facebook. They grew revenue year over year by 32%, they beat on earnings. So how can Facebook not perform when all the other mega caps or FANGs in the fourth quarter were doing awesome? So that was mistake number one. And what happened with Facebook is, yeah, they did grow revenue year over year by 20%. They beat by 230 million. Pretty good. However, they missed on earnings. They missed by 16 cents a share. That isn't necessarily the end of the world, but what absolutely killed Facebook is this paragraph right here. We expect first quarter 2022 total revenue to be in the range of 27 to 29 billion. Which represents only a 3 to 11% year-over-year growth versus this quarter last year. So Facebook themselves, they're saying potentially first quarter of last year to first quarter of this year, we're only going to grow potentially by 3%. That is alarming. And how do they explain this? Well, they're saying that it's because of increased competition, mostly from users going to TikTok, spending more time on TikTok. But you could argue that in general, social media is a crowded space with companies like Snapchat, Twitter, even YouTube. Additionally, they've had to shift in response to TikTok to shorter form content like Facebook Reels, which its monetization isn't as good as the Facebook newsfeed and stories. So this has hurt them. In addition, the iOS changes from Apple, where Facebook can no longer track their users' search data. This has hurt Facebook's bottom line. So let me show you the highlights from their earnings report, because this perfectly spells out how much of a disaster this is currently for Facebook. So total revenue, this is 3 months ending for 2020. They did $28 billion in revenue, pretty good. And they grew that by 20% to 33 million quarter over quarter. If you want to look at year over year, 2020 versus a full 2021, they grew revenue by 37%. So for the full year, they grew by 37, but that rate of growth slowed in the fourth quarter to 20. Additionally, total cost and expenses, how much money they're spending on people, R&D, and that sort, they spent 15 billion in the fourth quarter last year. They increased that to 21. So that's an increase of 38%. So their revenue coming in is only increasing by 20, but their costs to bring that revenue in increased by 38. This led to a negative. When there's parentheses, this means negative. They lost basically $200 million, or about 1%, income from operations year over year, fourth quarter over fourth quarter. This lowered their operating margin, how much profit they're making on the revenue they're bringing in, from 46%, which last year looked amazing, to 37%. Now, 37% operating margin is still pretty damn good for a tech company, but it's decreasing. That's not what investors want to see. Let's scroll down to their segment information, and this is where Facebook gets its revenue from. Obviously, Facebook gets almost all of its revenue from advertising, but what I want to show you is this category called Reality Labs. This is Oculus Quest. I have an Oculus Quest 2. It's a fantastic device. Facebook is promising to release an upgraded or new premium VR headset later this year. But maybe I was unaware how insignificant this $877 million in revenue is compared to their core business, Facebook advertising, Instagram advertising, whatever. 32 billion versus 877 million. And Facebook's core business is Facebook. I mean, congrats to these guys. Facebook monthly active users, 2.9 billion people, almost half the planet. But where is their upside? Where can they grow from here? You can see that this growth, 2.4 back in 2019, 2.9 the quarter before, it's barely increasing as users are leaving the platform. They're not growing monthly active users very much, and daily active users actually went down from 1.93 to 1.92. So Facebook's core business of Facebook advertising is under threat from competitors, and their whole shift to the metaverse and everybody's going to be wearing a VR headset, 12 hours a day, working from home in their VR environment. It's not reflecting here, and obviously this is going to take years to play out. Facebook is spending a lot of money to basically invest in this new business model. So look at this. Reality games year over year from the fourth quarter of last year to the fourth quarter of this year increased revenue from Reality Labs by 1.6 or 160 million. But look at their costs. They spent 2 billion, so they're losing money on this segment of their business, but they increased costs by 1.3 billion. So they increased costs by 1.3 billion to only make an additional 160 million. That is a terrible return on their spend for this division, which they claim they're shifting their entire company towards. So Facebook is still growing, even if at a slower rate. It's still a profitable company. This Reality Labs division needs to be accelerating their growth more to the 40, 50, or 60% year-over-year range rather than what it's currently doing. Let's now talk about the technicals of what happened here. And when I bought these call contracts yesterday, I was saying, what's the downside risk? I bought when the share price was at 321. My thinking was, well, there's this level of support here at 300. If Facebook doesn't give a good quarter, the stock will crash, 5 to 10% down to the 300 range. However, it completely fell through this line of support, and this is now a new line of resistance. When is Facebook going to get back to its to new highs? It's going to be a while, guys, because we got this level of resistance here at 380. We got a serious one here at 350. We now have a new one here at 300. So what happened to the technicals here? Where did this fall to? And it fell to a previous line of resistance, line of support. And you could say maybe it's here at 250, or maybe it's closer here to 245. We'll go ahead and put this here, even though the current share price is below it. I think in the next couple days, some large fund will say, hey, Facebook's trading at a discount. We can scoop up shares now. Their forward P to E now has to be like 13 or 14. It's a very cheap mega cap stock. However, what happens if something broader happens to the markets and there's a huge sell-off? Where is Facebook's stock price going to go next? And you could argue potentially there is another level of support here at around 220, but if 220 doesn't hold, it's probably going down to this $200 range. Can it go there? Yeah, it can. I think once again something bad happens to the broader market. Russia invades Ukraine, huge sell-off. Facebook's gonna go lower. For people who are saying buy the dip yesterday on PayPal, PayPal fell to 130 a share. Then Facebook gave bad earnings and caused the NASDAQ to sell off even more. PayPal is down another 6% today. So if you're thinking about buying Facebook, you might want to wait a couple days just to see what happens. What I can also tell you is after hours today, Amazon is giving their earnings, and if this is bad, Amazon's going to sell off more, and this will cause just other tech stocks in general to sell off as well. So let's switch over to my Schwab account, and it's not looking good, guys. These call contracts on Facebook, I've lost 76% of my value. Cost basis is 7,700. The current market value is 1,840. With a strike of 340 with an expiration date of January 2023, I'm giving this a 0% chance of getting back to 340 by January, so in 11 months. It's possible, but Facebook would just have to have 3 consecutive knockout quarters. And the reason why is the technicals on Facebook are starting to turn. We've already had a death cross event where the 50-day moving average has crossed below the 200. All 4 of these moving averages are now going to line up, and Facebook might rebound and get back to 300. However, I think these moving averages are going to be lines of resistance. The 300 is going to be a line of resistance. So for Facebook to get above 340 for these contracts to be in the money, it's not going to happen. I'm obviously not going to lock in a 76% loss based on this recent quarter. I think at some point in the next couple days, next couple months, a large fund somewhere will say, hey, we believe in the metaverse, we believe in Facebook's vision long term. We're going to lock in this amazing share price of $250 a share today. That should help it get closer to the high 200s, potentially 300, but I'm going to have to make a decision when I want to sell to close these for a loss and how much of a loss I want to take on this terrible trade, guys. So looking at the broader market for the S&P 500, the fact that one of the mega caps, Facebook, reported such a terrible quarter, this killed our upward momentum for the S&P recovering. We had 4 consecutive green days. Today is going to be red, 1.5%. And for those of you still wondering about these call contracts I still have in my Fidelity account, I'm still up 10 grand, and I think I am going to sell to close these right now. And the reason why is because after hours today, Amazon is also reporting. If it's not a good quarter, we're also going to have a red day for the S&P tomorrow. So rather than risk it, I'm going to lock in my 10 grand in gains on these contracts and then just basically get through this week and then figure out next week where I want to make my next trades. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you want to leave me a comment of I told you so, or Facebook sucks, or don't trade on earnings, I like sharing these videos with you of my mistakes because this helps me become a better trader. If I make a bad move, I definitely don't want to hide it or conceal it from you guys. That's not how I personally will improve, and I definitely want to get better. So thanks for watching. Until the next video, take care.